Hi, this is Jim Cramer, founder of TheStreet.com with Dan Dicker, who is our energy expert, but also going a little geopolitical today. Dan, I'm noticing a really interesting transference. Gold kind of going out of style after a very long run, although I disagree, but I get what the market's saying to me. And people buying, financial institutions buying oil as the hard asset.
I think that's right. I think what you have is a bit of transference. This is why oil has been so sticky, despite some fundamentals that you and I have discussed.
Yeah, I mean, we're awash with oil.
Exactly. That maybe does not, in fact, wash with the prices that we're seeing. But in fact, what I think you are seeing is a transference. The gold trade is a little bit tired. 20 straight years of going up. This may be the first year it doesn't do that.
Right.
I'm not saying that gold is rolling over, and I think you have a tremendous point in finding it, but there is a transference of value going on between gold and the traders who have been long gold for so long, trying to find something new. And I think oil, to a certain degree, has found a little bit of that transference.
Well, Dan, I think this is difficult for a retail audience. We have a lot of retail people who watch, because you can't store gold.
That's exactly
right.
Store oil.
Where am I supposed to put this oil?
You're exactly
Where do I put it?
And in fact, that's been the argument why gold continues to retain its value from a retail level. You put it in a sock drawer, you leave it there for 20 years, you come back and it's exactly the same as it was before. You can't do that with a barrel of oil.
But where are they putting it? How does it work? How's the trade work?
You do it financially. And of course, I discuss in my book, and I've discussed for years with you, the many financial instruments that have been created so that retail customers can get in on an oil trade over a long period of time, use it as a financial tool, as an asset diversifier, and they are using that. So there is a way to jump back and forth between assets as easily as gold to oil and back and forth.
Now, let's say you think that the reason why the 10-year has gone up in interest is because you think inflation could come back. Is oil a good hedge against inflation?
It is. It seems to me that this is another reason why it's been catching a little bit of a bid. And it's not just about the 10-year going above 2%. I think it's about the volatility that we've been seeing as much as it is the absolute price. And volatility always spurs people to look for hedges against that kind of volatility and that danger. And they look for hard assets. And again, I think oil has replaced to a certain degree gold and others.
At what point do we say that supply has increased, so it shouldn't be as good as the head and shoulders pattern, reverse head and shoulder pattern, which
you've heard about that. You've been
watching it.
Look, I said last week or 2 weeks ago with you that I think the risk is all to the upside. In fact, it's been proven to be the case. I think it continues to be the upside. One of the things I will point out is that what hasn't been spoken about a lot in the media in terms of the oil trade has been all the geopolitical implications that are going into the oil trade. I think that those matter a lot more than are being mentioned, at least right now. We have a president who has now begun to deliver arms into Syria. This is a very long-term problem. We know about what's going on in Egypt. With the Muslim Brotherhood. That's also an oil place. Libya has also. We know about Iraq. That is kind of moving backwards in terms of its geopolitical ability
but they're putting out
to survive. But
it's tinderbox.
It's a tinderbox. And no one's talking about this. We know about the increasing influence of Iran throughout the whole area.
Oh yeah, Mullah gets elected, but we don't know. It's still a very hard.
And nobody talks about these things. But I think that is also playing into the oil trade.
So now, if I wanted to be a stock guy, Chevron, Petrobras.
I was, as I was writing down, we're going to have this discussion with Jim. Jim's going to like Chevron.
Yes.
I'm going to send you to BP and Royal Dutch Shell. I think either way
you're not worried about the lawsuit.
No, I'm not. That's the way I'm going to play oil. I think those are
BP and Royal Dutch Shell. I love both. I just worry about the overhead.
And I think
Royal Dutch is so cheap.
And to comment on your play, I think Chevron is a wonderful way to play the oil trade as well.
All right. How about oil service, or is that too extraneous?
I think it's extraneous.
I think you want to
exactly. I think you want to be a little more focused when you go to oil services as opposed to a big multinational integrated like.
And
for example, BP
how about
Chevron.
MLP? Not really, right?
No,
they're trying to get rid of the risk.
Exactly, and you have an interest rate risk that goes with those, so you have to take that into account. Again, if we're going to talk about a straight upside risk for oil, let's get a big multinational that's going to be able to monetize
one last
it fast.
ETF.
Yes.
Really?
Yes.
Even though the rollover, even though the futures rollover?
I think you can use the big energy ETFs. I think it's okay. I think that's not the way that I would play it, but the retail guys love it so much. I will bless it if you go into it. The big one.
USO?
No, not USO. That one works in the futures.
Right.
The energy, the big spider energy one.
All right, absolutely.
I forget the
Okay,
symbol.
but I get
big spider
All
energy.
right, okay, that's what we'll look at. Well, Dan, I got to tell you, I think you're really onto something. I know I'm focused on gold, doing a webinar on gold. I like
an important
gold.
webinar.
Well, I like gold for the exactly what you said, the
Right.
storage, the ease, but
Right.
oil is going to be the financial gold. And I think that's a great call. Dan Dicker, energy expert, Jim Cramer, stay with us.